Hello friends, Namaskar दोस्तों, very warm welcome to another video with SD. And मैं हूँ SD Shananda Das, multi-asset trading and investment specialist. This video is a very important video, but largely I'm making this for the learners who have been associated with me since almost 2021 end, because that's where actually when I started sharing the knowledge everywhere. Not before that I ever took any class. So this is a very important video regarding, what is I'm going to talk about. I'm going to talk about the recession trade, because a lot of queries I'm getting, lots and lots of queries I'm getting about this recession trade that has already been. We had a wonderful ride on the first leg, especially जो लोग मेरे साथ associated थे since the early 2021 to July 2022. If you had listened to me, you had a wonderful time. Let me discuss and show you. Each and everything I represent largely, except for one teaching, that also, with evidence. And without evidence, I largely do not talk much. So, evidence wise, if I go to, this is EN Macro Micro, by the way, this is my favorite macro analytics website. If you are my student, don't miss this chance. You can subscribe to them at $100 a year, which is a 67% discount from their actual price. You won't get an offer like this regular, plus you get some trial also, I guess. So it's actually more than a year it becomes. But know this, I do not have any kind of financial transactions with EN Macro Micro. Means anyone, whether you join, do not join, it doesn't have any effect on my balance sheet. But I love their work, what they have done. That's why I recommend them. They're also kind of friend to me. Very. This is really awesome. Now, this is regarding, as I was saying, we are going to look at this and spread. If we saw some, say, if we want to know about recession and these economic, we have to know about bonds. Bonds are one of the powerful indicator to show any kind. अगर कोई भी market का मान लेते हैं कि future project करने का कोई capability हो, it is more likely the bond market. So bond market means the US bond market, and those of you who are aware through my class that whenever this 10 minus 2-year interest rates have gone to negative, a recession has always followed. Now that's serious, like 10 minus 2-year spread, whenever it goes to negative, has historically a recession has followed. A recession matlab kya? Major market crash, cyclical downturns. और इसमें सरप्राइज होने का बात नहीं. If we look at 100 years of history of our economy, every time there has been a period like this. The more we Indian economy became connected with the global economy, this recession and this connection with the global economy will have impact on our market, our system, our economy as well. We all remain globally connected. And every time this bond market, this 10-year, 2-year, you already know that. Since I'm making this for the students, I'll assume that you know a lot of things. You have done the classes. So every teaching, I'm not going to repeat. You know that. So you know how to play this. This is where it went to negative. July 2022, August 2022. This is where we buy, focus on the model. What we do now when it goes to negative, we know that a recession is coming, but what we do, we buy the equity market. You are aware of the model, the way we do it. And now why am I making this video is now July 2022 and August 2022. Let's look at the July and August 2022. Let's look at actual chart, weekly chart, and I'll go to Nifty. Okay. Nifty के लिए I'll look at the weekly chart, and I'm talking about July, June 2022, right? June, July 2022. From here, July or August, say from at this level, we had a ride like this. Now the market is still going up. This is a awesome and a crazy kind of move is happening. The market is steadily going up. There is no doubt about that. We are very, very bullish. But now basically is coming the exit point. Now, if you say, should we book here, sir, exit button right now from this rally? Now, as this spread goes from negative, you know the spread, 10-year minus 2-year, as it goes back above zero, that is our first round of exit from equity buy trade that started back in July, August 2022. That means you had an awesome ride. There is no doubt about what kind of ride you had. We had together. If you had listened to me, you are sitting on a very good gain because you have not just bought equities here, you also bought gold. I asked you to buy gold in July and August 2022. Now let's look at gold. You know the model. If you do not know, remember, go through the PPT and you will know the model. Focus on the model. This is gold. You are buying gold in July 2000, August 2022. You can see what kind of run gold has also given. And it is also going up. So what I'm talking here right now is what we are having is the first round of exit signals from this trade, because this particular spread has moved above the level 0. Now, as it sustains above 0.2, you can consider 0.25. When it sustains above 0.25, that will be our second round of exit. These are exits. These are not shorts. What are these? These are fundamental exit points, not technical exit point. And from a trade that started July 2022, means the stocks have given up 200, 300% run on this one. Some of the stocks, if you have chosen well, now in one case, I know Sazlon, I've chosen very well. It has given almost 600% return. And there are many, RVNL is there, many stocks which has gone awesome. Now, this is basically the fundamental exit that is coming. So currently Nifty is strong. You don't need to exit something which is this strong. But now you have to be careful because this is now a balancing act. The second leg of the recession cycle is the crash. First leg is the buy, euphoria. Second leg is the crash. You know this from the model. And now look at the Nifty chart. Look at the movement. It is not stopping. Whoop kind of move. These are risky moves, but these are also, if you exit early, you will have nothing but fear of missing out, but regret. We are all human. You have to understand the human element to it. Jesse Livermore, Mark Minervini, they are still making mistake. Why? Because we have a human element to this trading. So to avoid it, you have to look at it. You can't be blind in trading and very rigid in trading, and especially in macro. Now, this is a strong comeback. Bearish engulfing was taken out continuously, weekly gain. You see what a move. What an awesome move that is happening. So whatever now means is there are three broadly. We'll look at the exit signals. This 10 minus 2, 0 cross. So one exit signal, 1/3 exit मान लेते हैं कि आ चुका है. जो भी stock weak दिख रहा है now, it's starting to mature, book it, remain in the strong rising ones. And if you're in good mutual funds, try to book around 1/3 because the first exit signal has come from this wonderful rally. You want to continue still, but you want to do it more risk managed way. Obviously, the 1/3 that you'll book, that you have to don't put it cash, you have to revest. You can try bonds in this case. Gold is good, but gold will also add volatility, but bonds are better. They have less volatility. For this, you focus on the asset allocation. What the asset allocation is talking to you. I'll come to the asset allocation later on. But first, let me finish this up. This is very, very important. So first round of exit ke bina, there is not much to trade. And this exit in the long-term portfolios, 1/3 of the positions. And be more active. You have to look your stocks every day from now, wherever you see weakness. If you have been in that trade very long, you're in a good run, look at through the weekly chart. When you see momentum turning bearish or any kind of momentum fading, divergence, look to do risk management and quality booking into the stock. That is what is quality booking. Profit booking into strength, like what we are doing right now. 1/3 of your long-term portfolio can go away from the stocks. But this is a magnificent run that is going on, and that these are actually the signatures of the Euphoria Rally. It will be like so much, you will tend to forget. When you remember, जब मैं क्लास लिया था 2021, if anyone remembers it or see the recording again, you will see I was warning, you'll forget about this teaching. That is why this rally is named the Euphoria Rally. You tend to forget about everything, like the bull market is never going to stop. Well, that has not been the case. Historically, I don't think that will be the case. This time, though there is historically one example of golden period, but I personally do not think we are in that golden period where it is bullish for a very long time. Economy is growing. The new technologies can have a significant impact, but still, I think a lot of finances are bad in this. They are balance sheet problems are there which needs to be addressed via the slowdown and recession of the economy. Now, this is our fundamental. Now, this is definitely what you want to keep a check. You want to keep a check on the risk right now. So, in different level of risk, you want to measure. First of all, jo mere students, you are either you have the Rainbow Asset Master or you have the SD Cloud Master. So, either these two of them, you definitely have access to at least one of them. Look at the move from the very beginning. It's a lovely that is stocks are going like this. But the parties end all the time. So one time the party is going to end and people are going to, those who are not careful is going to cry like they did in case of Adani. Now SD Rainbow Asset Master, first of all, hide this one. If you know, if you're in the Rainbow group, you already have access to the V2. So V2 is the risk master. In the V2, go there and select the risk master and large. Keep a check on the risk. This risk master is awesome. We have tested this now live, tested this now, tested this in the back testing, back data, and live testing. Since its launch, I've been continuously looking at it on a regular basis. This is awesome in telling you about the level of risk. How do you measure it? You can measure it like recession risk is there. Risk phase has started. It was rising deep. Looks like it is not that deep anymore. So recession risk is there. Another, I have added two factors. You definitely watch this. This is time independent. Whichever time frame you put, this is independent of time. Now, this is on the other hand, these are dependent on time frames. You see 1, 2, 3, 4, 5, 6, 7 factors, okay? And among the 7 factors, 1, 2, 3, 4, these 4 are the most volatile. They will see very quickly they are moving up, changing, especially during the selling time. They will change very quickly. So now what you do, you keep a meter watch on this. Consider, say, 1, 2, 3, 7, and you will watch 3 time frame. For example, this is I'm just suggesting as an example. 7, you will watch the weekly, you will watch the daily, and you will watch the 125-minute as well. So if you combine all the 3, you will have 7 multiplied by 3, 21 readings across different time frames, 7 for each time frame. Now 21 factors, these 21 factors can help you to manage the risk. If the more it becomes red and yellow, the more you do position sizing, low beta stock, low volatility stock, MNC stocks, these are kind of the stock you'd have to look for during this phase when the risk is overall going up. Asian Paints, good. Asian Paints, I'm getting good signal. Looks like a lot of stocks are going up. Heritage Food is another one that I've been closely watching. So I'll come, there's no hurry. Usually I prefer to wait for the closing. So closing is more important. For sometimes I enter early before the closing, but never the full quantity that I intend for the first round of purchase. Means if I want to purchase 20% of my capacity, I'll fire 10%. So anyway, these risk factor के तरफ आप नजर रखिएगा. On a regular basis, the more it is becoming risky, you'll have to reduce your position significantly. And those who have Cloud Master, you come down here and you watch the VX1 chart, VIX. You definitely watch the VX1 chart. And VX1 chart, you largely, most importance, give it to the daily chart. And you can also do the same like the other batch, the weekly, daily, and 125-minute combination. This can be helpful more, or may not be, not sure, but daily definitely you should watch. So daily, moment both the trends are bullish, like here, you definitely want to do risk management. That can be option buying for hedging, could be. That can be low beta stock. That can be negative beta stock. That can be move into cash. And all the risk management that we have discussed in our sessions. Now, what especially give more weightage to the short-term trend than the long-term trend. Say 70% weightage to the short-term trend, 30% weightage to the long-term trend. So short-term trend has been bearish and the equities have been doing better. So this is one tool you'll have to regular keep a check on this. In addition to this one, in addition to the watching VIX and the risk master, obviously follow the rules जो हमारे asset master के अंदर. And overall, you keep a regular check on our asset allocation ratio. You know how to asset allocate globally now. There is no surprise to it. Now you move to the daily chart, okay? Not in the weekly chart anymore, means you cannot be passive. Change the setup to fountain of gold. And both the students, you have learned asset allocation. It is a high time to apply that. If you had applied the asset allocation, it was not at all difficult to find that it was the auto sector that has been outperforming. And since the auto sector has been outperforming, you would have found Mahindra and Mahindra as well. Like beautifully going up. Mahindra and Mahindra leading the auto segment. What a base say it has been rising. So you would have gotten a good opportunity with the asset allocation. Passive asset allocation is not bad either, but current phase with the historical basis pay recession approaching, this may not, the weekly charts may not be a great approach to just those who are starting fresh your journey. Those who have started back with me in 2021, July, then you have a long ride. That could be different. But after this, a good, beautiful pattern breakout in Mahindra and Mahindra. And also remain with the asset allocation. Like if you look at this ratio is currently telling you there is, though, because you know that I'm assuming कि आप जानते हो इस ratio को, you are my student, I'm assuming, because this is largely for the students to discuss our recession model. So you can understand that there is no point going into long-term bonds. It is the equities. Equities के तरफ ही रहना पड़ेगा. So whenever the asset class that is outperforming, that's where you'll have to park your money. You'll have to distribute, obviously. Joe portion you want to keep safe, you can go for BIL, right? That will generate you less amount of return compared to equity, but that is a safety trade. A return is always has to be measured in terms of risk that you are taking. You cannot compare the person who is trading bonds and the person who is trading equities. Both are not carrying similar risk. Investors, there are various types of investors who will look for different ways and strategies. So currently it is the equities that's making money. So equities ke taraf hi rehna padega. No point going into bonds. So my advice will be in this period, as we are moving, keep a watch on the risk master. You'll know about the recession risk. You'll know about the market risk. Those of you who are now cloud master, what you will do, you will watch the VIX. And what? You will, if you are in the EN macro micro, you will go world financial stress. Okay? World Financial Stress Index. So this index you want to keep a check on. Okay? If the risks are on the rising, like there is a precedent, you have seen COVID, or any time during risk goes up, it is reflected in the stress index. So keep a check on the stress index as well. Secondly, go to Traders Insight. Under Traders Insight, come down to the popular. Under popular, keep it, check market sentiment. And those who have done CCMT with me, you know you have a secret tool discussed in the class number 5. It is time to get that. And this is where you want to do. This is the fear and greed index. Whenever it is reaching the greed level in this period, that is the time to be very careful. And when the sell-off happens, I'm going to discuss the sell-off later on when it comes. But these are the cautions you want to play it out. So what I'll discuss to summarize what you have in your arsenal to fight the coming situations, if it's coming. You have anyway the bond market to signal you. 10 minus 3 months spread will be another one. Secondly, you have those who are with Rainbow. You have Risk Master to guide you fully through this recession. It will clearly. In addition to that, you apply the asset allocation. Those who are with Cloud Master and CCMT watch the VIX, VX1. You in addition, which Rainbow do not have, you have a secret tool discussed on class number 5. Bring out that tool right now and keep a regular watch on them. And then watch out for this market sentiment indicator, where it's going. And obviously, in addition, regular indicator you have, that is asset allocation is a must, but regular indicator, I mean, you have the charts of Nifty, like what it's doing. I don't think my fountain of gold setup is going to miss a chance to carefully exit you at the right time. Each and every time, not always all the buy trade, but it exits will always give you before the mega falls happen. So this is a good riding going on in Nifty. Keep a watch. All the best to you from my side for this upcoming event. I hope the upcoming journey will be great for all of you. All the best wishes from my side to your trading. And as always, happy trading.